22%. Within 12 months, it ripped 300% to its all-time high. In 2008, global financial crisis. Bear Stearns went under, right? The credit markets froze. Gold dropped 34%. Then the Fed launched QE, and gold ran 180% over the next 3 years to over 1,900 an ounce. And right now, 2026, Iran war again. Strait of Hormuz is closed, right? Gold dropped 25%. The average drawdown across those 4 episodes was just over 25%. Gold's drawdown from February high to March low, exactly 25%. And gold's already bouncing. It's back above about 4,700 right now as of this week. It's starting to move a little bit higher. But the pattern's triggered, right? The snapback has already started. But the thing is that, well, at least the thing that I'm really paying attention to right now is that the gold recovery, it's not the real story. Right? Gold's the signal in the story, right? Every single time this pattern completes, 73, 78, 08, gold wasn't the only thing that started moving, right? There's a very specific sequence that plays out across multiple asset classes, stocks, bonds, real estate, commodities. They all moved, but in a particular order. And the reason they moved in that order is the same every single time. Because every single time gold gave this signal, it was telling you one thing. It was the math behind the financial system had broken. The people in charge were about to be forced into a decision that they didn't want to make. And it's that decision, the one that they always make, they don't want to, but they always make it, is what drives the entire sequence. Now, it starts with a piece of math that, again, nobody seems to be noticing, at least they're not talking about right now. And right now, it's all starting with oil. Now, before the Iran war, about 20 million barrels of oil per day were flowing through the Strait of Hormuz. All right, that's about 20% of the world's oil supply moving through one single choke point. Now, when Iran closed the strait, well, the world scrambled to replace those flows. So we've seen Saudi Arabia, they've ramped up its pipeline to the Red Sea. We've seen the UAE, they pushed more through their pipelines. The IAE has released emergency reserves. Russia started moving floating storage around. And all of that gets you to about 12.5 million barrels a day in replacement supply. About 4 million of that is temporary. And right now we're just burning through those stockpiles. And those stockpiles, they're not getting refilled. Now, Bloomberg estimates that the real shortfall is over 11 million barrels a day. All right, so what does that actually mean? Well, it means the world is short somewhere between 7 to 10% of its oil supply right now. And that number matters a lot because in the last 60 years, a drop that big, it's only happened 2 times before. In 1980, global oil consumption fell about 4.3%, and it caused a recession. During COVID, it fell 9.2%, and the Fed